Folks, let's get cracking on to our first keynote speaker. Our first keynote speaker for today's summit is Myles Pover. Myles is an experienced business advisory principal, simplifying complex problems for clients and providing valuable insights into their business from RSM. Here to speak about 3 key financial reports for all business owners. Please welcome Myles Pover.
Thanks very much, Nathan. I can hear the round of applause coming through. It's one of those funny things about doing these presentations online nowadays. Look, as Nathan mentioned, my name's Myles. I'm a principal at RSM Australia. Some of you may not have heard of RSM Australia before, but we're a mid-tier accounting firm servicing the SME market within Australia. We have about 30 offices around the country. And we're in all the major cities. So we are as well. I think the latest AFR top 100 came out with the 8th largest accounting firm in Australia. So our value proposition is that we're big enough to know all the answers and have all the technical resources, but we're still small enough to care about our clients. Now, look, I know what you're all thinking. Why would he pick an accountant to lead this thing off? If he's trying to go out with something exciting, why is he calling up an accountant? But I think that the answer to that question, was given in the introduction when we're talking about the bottom line and the themes for today. So there you go, that works. So that's me. Lackluster title, I know. Marketing is not my thing, but I think that gets the message across pretty well. So, look, I like to start these presentations with, running through the things I want to get out of it, or things I want you to be thinking about today. So when we finish up, what I really want you to be thinking about is, well, first of all, knowing what these 3 key reports are, and I want everyone to be looking at them at least once a month, if you're not already. Once a week is even better, and we'll go into that in a bit more detail. The other key thing with these reports and looking at your business finances, in any context, is not just looking at the numbers and saying, oh yeah, that's good, or that's bad, or whatever. It's understanding why. A lot of business owners, and in my experience in the SME market, a lot of business owners don't go beyond the bottom line number or what the balance sheet says or what their cash flow statement says. They don't really delve any deeper into, why were my results that way this month? What worked well? Why are my expenses so high? Why did I not make a profit, et cetera, et cetera? So I want us to be thinking about that. And then the final thing I hope you go away with today is you thinking about your business and what are the 2 or 3 key KPIs in your business that really give you an indication of how everything's going. And I guarantee you, whatever your business is, outside of the profit, the bottom line or the profit figure, every single business will have 1 or 2 of these or 3 of these key KPIs that you can point to every month and go, that KPI said this month, and therefore I think we had a good month, right? So that's what I'm trying to get out of it today. There's a little bit of accounting side of things with looking at the key financial reports, but I think as being a business owner, accounting and financial reports and things like that is just something you have to deal with. It's if you don't enjoy it, it's a necessary, I'm not saying necessary evil, but it's a necessary task. We all need to be looking at and understanding our numbers, because if we're not, we can't answer that question, what's the bottom line? What's my bottom line at the moment? We don't know, the trends. We don't know where our business is going. We don't know what we can do differently. So let's get into it. So the 3 key financial reports, I'm sure you've all heard of it. I heard of these reports, but maybe you don't know what they are or what they tell you or what they mean. They're the profit and loss statement, which I'm sure a lot of you would be familiar with, the balance sheet, and the cash flow statement. Now, prior to the advent of, sophisticated online real-time accounting systems, these reports were really hard, or they took a lot of time to pull together and pull out of your business to look at. And often you're looking at them, a month later. Nowadays, with the advent of things like Xero and MYOB and all these amazing, light, easy to use, easy to understand accounting systems, you can run one of these reports, or you can run all 3 of these reports every single day, every single week, every single month. And it's such a change from how it used to be. So I think I've got a poll question here. I'm just interested for my own context as well, and I don't know whether Nathan's got it, but there's a poll here. I want to know what accounting software everyone's using. Cheryl's a keen Xero fan. And maybe, I mean, how's the poll looking, Nathan? Maybe we can just use the chat, perhaps, guys. A little bit more.
Poll is looking good. We have 77% on Xero.
Yeah.
But the 23% on QuickBooks.
Oh, really? There you go. Okay, didn't expect that. Look, obviously, Xero is the flavor of the month, and so much so that I even use it internally here at RSM. So, Xero's a great system, and the great thing about Xero is you could run all these reports in under a minute. Okay, so let's get into it. These are the 3 reports you should be running every month. I'm going to go through a quick explanation of what they actually are and what they'll show you. Nathan, that's unfortunate. I think you get it for about $50 a month, Xero, or something in that range. So it's not too bad. It is getting more expensive. I'll push on because Eob's going to be pulling me off stage, or Nathan will be pulling me off stage if I haven't finished this on time. So there you go. I've just received the results. So yeah, 77% Xero, 23% QuickBooks. Good. Nobody's using Myles. I agree with that. So the first one's the P&L statement, or the profit and loss statement. Now, everyone hopefully is familiar with that, but that shows your revenue and expenses for a specific period, right? So your ability to, or inability, unfortunately, sometimes is the case, to generate a profit. Now, when we talk about the bottom line, the technical meaning of bottom line is really your net profit. So what drops out the bottom after you add up all your income and deduct all your expenses. The P&L statement, it is a powerful tool in that, it assesses your performance for that month or that year or that period, or the month-on-month performance, or you can slice it and dice it a number of different ways. I recommend looking at it on a monthly basis, because it's going to help you identify income and expenditure trends, and that identification and the understanding is that whole why piece, which we'll talk about in a bit more detail in a minute. Now, the sophistication of your accounting practices can impact what that P&L looks like. Some technical accounting terms like accrual accounting and depreciation and amortization and things like that often impact it. It's probably a little bit beyond what we're going to talk about today, but I just want you to be aware that the first key financial report that you should be running at least once a month is your profit and loss statement, and that gives you your revenue and expenses for that period of time. So in this case, we'll say it's the month. So I don't know if everyone can see that. I can't really see that on my end very well. But it's an example of the P&L. So if you're on Xero, you should be able to log into Xero and run your profit and loss. Again, I think this is cut on a monthly basis, but it's just an example there. The second key report is the balance sheet. Now, a little bit different to the P&L. The balance sheet really gives you a snapshot in time of the financial health of your business. The balance sheet will consist of assets and liabilities. Assets being things like cash, things like amounts receivable, amounts collectible from clients, fixed assets that you use in your business, and then liabilities basically are things you owe. And the general idea is that your assets want to exceed your liabilities, and that's the value that you've got in your business. What that net assets figure also shows is, can the business cover its liabilities? So is it solvent? Can it cover its expenses? Can it cover all these different obligations that it has? Another thing that the balance sheet will show you is where your assets are tied up. So what do I mean by that? Well, your assets aren't just cash. Your assets are cash that is due to you. So that'll be in the form of a trade receivable or a trade debtor. if you work in a business that has trading stock, say if you sell something, inventory, your assets, your cash or your assets might be tied up in that trading stock as well. So as well as giving you that nice net position, it also shows you, where your assets are tied up. So for example, a business might not have a lot of cash, but it might have a really strong balance sheet. And why would that be the case? Well, that's because your clients might owe you a lot of money, or a lot of your money might be tied up in the inventory that you're yet to sell. So when you look at it like that, in the trade debtors example, in the trade receivable example, that gives you a clear action point. I need to go and chase up the people who owe me money. So that's the balance sheet. There's some of the things we should think about. I'll go into that in a bit more detail in a minute. And there's an example. I'm not sure if that's clear on your end, but assets, liabilities, fixed assets, net assets, equity. So the final report, the one that probably people aren't too familiar with, is something called the cash flow statement. Now, the cash flow statement details the cash movements for the period. So in essence, it looks at what was your opening balance of cash for the month, what transpired. So, what income did you receive from your customers? What amounts did you pay, et cetera, and how does all that reconcile to the closing balance in your cash account? There you go. Perfect. So the good thing about the cash flow statement is it records these non-cash items. Non-cash items, I'm referring to things like depreciation and amortization and things like that are accounting fictions. So the cash flow statement really, when you look at that, and if your cash goes up from the start of the month to the end of the month, you can probably tell that you've had a pretty good month. If it's gone down, you need to understand why. So there's an example of the cash flow statement. Again, it's not very clear on my end. Sorry about that, guys. But again, if you've got Xero or even QuickBooks, you can jump in and run these reports. So, I mean, yeah, it's all well and good to say, okay, I'm going to run these reports once a month and look at them and go, yeah, great, that's cool. That, this shows me that my net assets are negative, or my profit's good, or my cash flow went down. But the real skill in looking at this, or the extension that we need to go to when we look at these reports, is you need to understand why. So and this might be as simple as sitting down and reviewing your financials for an hour once a month and just writing some notes. Devoting the time to understand what has actually happened. And look, in my experience dealing with SMEs, and being on other business advisory boards, it's really surprising the number of small businesses, startup businesses, even established businesses that don't actually have a formal process that they go through at the end of the month just to review their financials and how they've gone, right? Because doing so, it'll highlight things that you're doing or you're not doing. It'll explain why you've achieved these results. So for example, if my sales were strong this month, if my sales went up by 100% this month compared to last, why? What did I do differently? How can I isolate that and do that again this month and make sure that grows? It's these additional questions you need to ask yourself in your business. Sometimes it's very easy to just get absolutely consumed with the runnings and the day-to-days of your business. And look, something like Growth Gen and coming to these sessions does allow you to step back a little bit and just think about things with a bit more context. So, I mean, what else? What are other examples? I made a huge loss this month. Why? What happened? Did I have a big insurance invoice due? And did I have to pay that? Yes, that might mean you made a loss during the month, but really that cost, you should really spread that across the year. So it's actually probably not cause for concern. We touched on this one before. My profit is really strong, but I have no cash. Where's my cash tied up? Cheryl's asked a question there. How do you account for prepayments? So look, Cheryl, it depends on how sophisticated you want to get with your accounting system. If you've got a bookkeeper, you can instruct them to do it. But, prepayments, that insurance, for example, you probably should be accruing that and spreading it across a month to spread the cost and dampen that impact on your P&L. But really, I mean, we can probably talk. That's probably a separate separate presentation about how you account for things like prepayments and accruals. But thank you for the question. My profit is strong, but I have no cash. The big one I see dealing with my clients is it's tied up in debtors. You win the work, you invoice the work, you do the work, but then the last thing in that process is you need to collect those amounts from your clients. And often that goes unseen if you're not reviewing your financial statements, if you're not reviewing, your debtors balance on your balance sheet. My balance sheet is strong, but I have no cash, very similar. And the big one I want to stress is looking at the month-on-month trends and what that tells me. So if we scroll back, and I don't know if everyone can see, but this P&L, but I was having a look at it before, and there are a couple of things we can just pull out of it, I think anyway. Can everyone see that all right? I assume yes. No, okay. I'll give you an example. I'll walk through it then here, Jay. So this P&L, it shows, there we go. It shows sales increasing in the middle month and then decreasing, right? And it also shows a loss and then a break even and then another loss. And so it's identifying these trends. What did I do different in that middle month that made sales go up? And why have I then turned a profit again in the final month when my expenses are the same? Now what I can tell from this P&L, and you probably can't see it, which is disappointing, but it looks like sales have gone up and then also wages have gone up. So sales have gone up. We've hired some more people to do the work, but then in the following month, wages have been the same in that the people have still been hired and people are still on deck, but the sales numbers gone down. So the thing that stands out to me here is we need to fill up this sales pipeline, get things going. So it's observations like that, and there is no general rule about what you should be looking at. It's really getting a feel for how your business operates and what your month-on-month results look like, to give you a bit of a feel and a bit of a rhythm as to what these things mean for your business. And doing that leads me into to the next point I want to make about business KPIs. Now, I am definitely a believer, dealing with a lot of clients across a lot of industries, that everyone's business will have 2 or 3 key KPIs that'll tell them a lot about their business performance. And to an extent, you can build these into your reports. Let me just give you an example. RSM is a professional services firm, right? We sell our time, we sell hours. So our key KPI in our business is our staff's productivity. So our staff's chargeable hours. If our staff are being kept busy, we know that that's going to convert to revenue to charge our clients, and our cost structure is such that it's quite fixed. So if we're filling up our staff with work, then I expect a positive bottom line, right? If they're not being filled up, I know that perhaps I need to go out and win some more work, or we need to put some efficiencies in to help them maximize their chargeable time. In something like a retail business, that key KPI might be the number of customers that walk through the door. It might be the average value of a customer sale. It might just be total sales that going through. Look, for an established business, it might be the key KPI for an established business might be net profit. I'll give you an example of a client of mine. He's a very good businessman. He runs a company that does office fit outs. He's been doing it for 15 years. He rarely looks at his financials. He rarely looks at those 3 financial reports that I that I've taken you through before, and I get on him all the time about that. What are you doing? But there's the one key KPI from 15 years in business that he looks at, and that'll give him an indication about yes or no, my business is going well, is the number or the volume of his sales pipeline. So what does that mean? He looks at if he's got $1 million worth of tenders and things out there every month, he knows that on average he wins 70% of those, right? And that 70% will generate enough revenue for the business to generate a profit every month, right? So that's really an example of you, and you get to know this the longer you've been in business, but understanding the ebbs and flows of your business and identifying those key things. You know, for an established business, it might be net profit because the business is there, the customers are there, the costs are quite fixed. It might be that bottom line number, that net profit number, that's your key KPI. For a growing business, a lot of growing businesses, they run at deficit for years. So it might be growing businesses might be number of new customers, number of customer signups, et cetera, et cetera, et cetera. So just in the chat, while I've been talking, if you have, and if you've considered in the past, what is your key KPI that you look at in your business? So Leanne said she didn't set any for herself this year, apart from monthly targets. Didn't work backwards. So that's fine. Monthly targets are fine, Leanne. In a growing business, sometimes it's new customers, it's revenue. I need to generate X revenue to take out X number of wages every month, or owner drawings. So Tina, monthly sales. Yep. Net revenue and profit. Yep. Great. What about drilling down? Are they saying net revenue is fine, but you know, it's monthly sales to an extent, but how many customers, how many new clients is that, Tina or Cheryl? You know, can you drill that down into, I need to win 5 new clients every month, or I need to increase my client size by 5 every month, or something like that. Sales conversion is a great one as well. Yep, especially for a business like GrowthGen. So hopefully I've got you thinking about that and what there might be. Yeah, Rajan, sales pipeline, absolutely. Just like my friend in the furniture business. And as you go on, you'll get a bit more data about, you know, these things. So, you know, I convert X number of proposals that I put out there. Number of new clients per month, Cheryl. Yep, great. Resource utilization, love it, Jay. Jay's in professional services, I'm sure. Excellent. Now I'm conscious that it is 1:10, Nathan. What I'll also just note, guys, is yes, this concept of the bottom line is important, and technically it's net profit. But I like this more abstract view of what the bottom line is. You know, what does it mean to your business? What is the bottom line for your business? It could be similar to those KPIs, perhaps, but it could be, you know, I want to make enough money to draw X number of wage so I can put my kids through private school, something like that. So yes, your bottom line is your profit, but you know, what does it need? What does the profit need to be, or what are the other goals that you have in your business? And these are discussions, or life, business and life. So, you know, the bottom line might be selling your business for 10x what it did in revenue last year. That might be your, you know, your goal. So tying that bottom line to what your goal is, I think it's a really valuable thing for all business owners to consider, no matter where you are in your journey. So what is your end goal? What is your exit strategy? You know, I've got some examples there. What's the bottom line for a tech startup? It's probably being purchased. An established business trying to scale up, it's probably net profit. You know, all these kind of things. But really understand your financial reports, understand what they mean, understand the ebbs and flows of your business, and get a feel for it. Figure out what your key KPIs are, and that really can clearly define, you know, how you run your business, what you do in your business. There you go. Bottom line, Rajan, bottom line is to see my family overseas twice in a year. Great. Love it. So let's end with a call to action. All of us, we're going to run these reports every month: profit and loss statement, balance sheet, cash flow statement. We're going to look at them. We're going to understand them. We're going to ask ourselves why the results are what they are. And we're going to learn from them. What are the trends we can identify? You know, what did I do right last month? What did I do wrong? And then on top of that, we're also going to identify 2 to 3 key KPIs that you can use to really have your finger on the pulse or get a good gauge without looking at those financial reports sometimes, but to get a real gauge on what your business should or what your business performance is doing. 3 minutes over time. I'm so sorry. Any other questions, guys? I know, look, we didn't have a lot of time to run through that. Hopefully I've given you some things to think about. I think that was my real goal in talking to you today. Get in, understand your business, think about what your KPIs are, because you'd be surprised the number of small business owners that don't actually do that. And I can see Marjorie nodding her head because she deals with lots of small business owners as well. So hopefully I've hit the nail on the head there. So again, Eob, thank you so much for having me, guys. Look, I think my contact details will be circulated. If not, you can find me on LinkedIn and reach out if you have any questions. Thank you so much. Back to you, Nathan.
No worries. Thank you so much, Myles. That was fantastic. You really, you definitely got me thinking, and I'm sure you've got everybody thinking. I was thinking, to myself, geez, I've already got all these other like New Year's resolutions in terms of, maybe go to the gym 2 days a week, and, all this other kind of personal stuff. But then you're like, all right, now I need to settle those reports once a month. And I think they're so much easier than going to the gym. That's for sure. At least for me anyway. But no, that's great. I think that's sort of that business gym, putting that practice into motion and getting that data is really, really critical. So thank you so much. That was a lot of great insights there today.